Hello everyone. Under the Directorate of Higher Education project E-Content, DISTAV, I am here to present on Introduction to Investment, Unit 1 of Financial Economics of SYBA. Myself, Sanjana Naik, from Assistant Professor in Economics from Sri Mallikarjun and Sri Chetan Manju Desai College, Kanakona. Today I will be dealing in Unit 1, that is Introduction to Investment. Under this particular unit, I am taking up the first module or first subtopic, that is meaning and nature of investment. That is module number 1. So, under this particular subtopic, I will be dealing in meaning of investment, more specifically the economic meaning, financial meaning, as well as the nature of investment. The learning outcomes, or after completion of this E module, students will be able to understand the meaning of investment and they will be able to distinguish the ultimate investment of financial system and real economy. Also, the student will be able to understand the nature of investment. Let us see the meaning of investment. We hear the term investment or word investment in our day-to-day life. People use this word from their own perspectives and from their own understanding. So, to have a deeper understanding or to have a clear understanding about the word investment, we will look into the meaning of investment. Now, the dictionary describes investment as employment of funds with the aim of achieving additional income or growth in value. It is also like you are waiting for a reward for the investment that you have done. It also involves commitment of resources which have been saved or put away from current consumption in the hope that some benefits will appear in the future. Now, these benefits can be in the form of dividend or they can be in the form of interest, as well as they can be in the form of capital appreciation. Now, the term investment is not simple as it appears. Now, the financial experts as well as the economists define the term investment in their own ways. To the economist, the word investment means net addition to the economist's capital stock, which consists of goods that are used in production of goods and services. Now, to them, investment implies formation of new and productive capital in the form of new construction, new products, durable equipment such as plant and equipment. Now, in simple words, to economists, investment refers to investment in physical or tangible or real assets. On the other hand, financial experts define investment as money utilized for buying capital asset. Now, these capital assets may be or they can be stocks, bonds, derivatives, or any other financial asset. Now, money deposited in banks as well as machinery purchased in anticipation of earning income is also included, or it can be an example of financial asset. Now, apart from these two real as well as financial asset, we have the third category of assets which are called as commodity asset. Now, these assets are the examples of these commodity assets are wheat, sugar, crude oil, etc. Now, to summarize the meaning of investment, I can say that investment is employment of funds with the aim of achieving of future income. People invest anticipating in the future, anticipating a reward in the future, and investment is made in financial asset, real asset, and also in commodity asset. Now, we will move on to the next subtopic, that is nature of investment. Now, nature of investment is again divided into 4 subpoints. The first one is returns. Now, returns here means first all investments are made or they have a special characteristics of expectation of some return. So, they are in the form of yields plus capital appreciation. Now, returns depends on nature of investment, maturity period, as well as other factors. Now, the when we use a formula to define returns, or returns can be is equal to capital gains plus yield. Now, yields are or they can be interest, dividend, profit or anything. The next nature of investment is risk. Now, risk here refers to loss of principal amount of an investment, that is the original amount of investment. Now, risk depends on the type of investment. If the maturity period is longer, or the risk is more. Now, most of the people, in order to avoid higher risk, they invest in debt instrument. Now, these debt instruments can be bonds or debentures. Most bonds are issued by government, or bonds are the securities which are issued by the government. Government or semi-government bodies also issues different types of securities which have a lesser risk. Now, higher the risk, higher the returns. Now, higher risk involves in ownership instrument. Now, these ownership instruments can be equities, or they can be like here you are the partial owner of that particular company or the institution. Next one is safety. Now, in terms of safety, we are dealing with protection of investors, principal amount and expected rate of return. Now, safety again it is linked to risk. If people want to prefer safe capital, or if they want to have a safer capital, here people have to invest in less risk securities, like again the same example, bonds and debentures. The third one is liquidity. Now, liquidity refers to an investment ready to convert into cash. Now, you all must have heard about liquid asset or sometimes near money asset. Now, these are like they can be like cash, okay, or money market securities. Now, mostly these liquid assets are or they can be easily saleable or marketable. So, higher the liquidity, higher will be the returns. The last one is glossary. Under glossary, I have included investment, the meaning of investment in it, and the references. You can refer to these books, investment management books, as well as you can refer to different sites for additional information on meaning and nature of investment. Thank you.